Alright, good afternoon everyone. Today is Tuesday, May 15th, 2012. This is Michael from CFRN, and we're just going to go over the trades from the live trading room this morning, the ones that set up, the ones that I took, the results, and whatnot. Let's start out with the results. Today, this morning, we had NQ was -8 tick, the YM was +3 points, the TF was -9 ticks, and the ES was +8 ticks. That's what we had for our results today. Alright, now I missed a ton of trades this morning because I made a little video, a little video about how to use the slingshot and how to set, not so much how to set it up. Well, yeah, I showed the properties, and I actually showed the indicators that are being used on the charts that you're looking at right here. It's all in that little video. If any of you guys are partners or you're on the free trial out there, send me an email at support@cfrn.net with just video in the title, or slingshot in the title, slingshot video, and I will send that off to you. Okay. As long as it's as long as I can send it off. I'm not even sure how big that thing is, but anyway, let me go through the actual setups here. I'm just looking to see how big that file is. It's 58 meg, so you would have to have an email that can accept that.
Upload it, private link.
Okay, that's what I can do. I'll upload it and I'll send you all a private link. That's what I'll do. Perfect. Good idea, Dwayne. So I'll send you a link to the video. That's the better thing. All right, for all the partners that are out there who will want to see that video, and folks on trial. Now, let me just go through everything that happened here. I want to start with, I'll take off where Dwayne left off, okay? Here on the 10,000 contract chart. This morning, let's see, in here, the first opportunity was right here, where price, the BBC was crossed over by the MA1, right here. The MA1 crossed the BBC, same thing. It pulled back down here and it was held in by the MA1 right here. We didn't get long on this because all the other markets were going down at the time. They did go down. I had figured it was probably going to get down here to the weekly trading zone, which would have stopped me out with a 2-point stop. Then it moved back up, and as it moved back up, it pulled into here. This, I think Dwayne took this trade this morning. We did have some bullish divergence at the time down here. All right, we had bullish divergence. Now look at where on the DMT, you see where the trend strength line is down here? What that typically means is that whenever it crosses into the envelope, you're likely to have a pretty big move when that happens. It did cross into the envelope right here, and it dropped right down to the weekly trading zone. Okay, from there it bounced off the zone up to the next zone, and now it'll probably go back down to this zone. But as the market was moving on, I didn't take this trade in here. I don't remember exactly why I didn't take this trade, but I let it go, and it pulled back about 1.5 points before it went up to the profit target. All right, this little piece right in here was all part of this trade, and then it dropped down through the BBC again right here, and we did short right here. Okay, we took this short right here. We shorted, I think it was at 38.75. We shorted right over here, and we took 2 points profit right here. This over here happened during the break. You can see it's pulling back to the BBC right now with bullish divergence right here, but it's going right into a weekly trading zone. Now, some guys would say, okay, well, we'll just go long right into the zone. We'll pretend the zone's not there. But for me, at the moment, we have a doji right there inside the weekly trading zone, suggesting that it's going to turn from here. And if you look at where this thing went, it went right up here, just about put in a double top, and now it's moving down. All right. That was the one trade that we took this morning, was right here on the ES. Now on the Russell, we only took one trade there too. I believe it was a losing trade. But what I want to go through here is the trades that set up. Now, I was putting grade levels on the trade, like A, B, C, all that sort of stuff this morning. This one right here I was calling an A trade because everything is going up. The BBC is going up, the MA1's going up in blue, the cycle down here is going up, price pulls back down, gives us some divergence down here, tests the BBC and closes up. I was saying that would be an A trade right there. your entry would be right here on the up close, okay, and then it took off. This one over here, it was similar, except the cycle, down here the cycle was red. It wasn't quite headed down yet, but it was red. The MA1 was red and headed down. The BBC had flattened out, so we didn't have everything going up right here. I was saying this would be probably a C plus trade, something like that. Maybe a B minus because the cycle wasn't really headed down against you yet. That trade, obviously, you pulled back down, tested the BBC, and gave an up close right there for a run up into the zone. The next trade that I took was over here. I missed that trade, and the trade that I did take was over here. This was an A level trade that just didn't work out. Everything was red and headed down. You know, everything. It was red and headed down. And I shorted right there and stopped out for 9 ticks right there. You know, I missed these two. I missed these two nice trades right here, and then I got that trade. This trade right here was coming out of the weekly trading zone. I didn't take this one on purpose because the YM and the ES were going into the zone as this was coming out of the zone. All right, I didn't trade anything in here because of that. I wasn't going to trade this because it was going into a zone, and I wasn't going to trade this because the other ones were going into a zone. But you can see right here the same type of thing. We had the bullish divergence. This was, again, a B minus type trade. Pulled back, tested the BBC, and gave an up close for the move up. This one over here would have been an A type trade, or maybe an A minus, B plus, because the MA1 turned blue. The reason I didn't take it, though, was because it was going right into the zone. But if you take the zone part out of the trade, then you would have been looking to get short right here on the down close. Okay? After this bar closed down is when you would have been looking to get short. All right? And now there was plenty of opportunity right in there on that. And then that was it. You see right over here, this move down, it never pulled back. It never pulled back to give us an opportunity. It went zone to zone right there without giving us an opportunity. It went sideways right inside the zone here, so we didn't have any opportunities in there either. Now, since then, let's see, we went zone to zone again. Right here, the cycle is red. It's been red for a while, so I wouldn't have taken this trade. It's red and headed down. We do have the bullish divergence to test to the BBC in an up close. That would have worked. This just happened, you know, well, a half an hour ago now, but it worked. But I definitely would not have taken that trade. Okay. And right here we have some bearish divergence. We got the up close way up here. We got the down close way up here. By the time we got the down close, the cycle's blue and headed up against us. MA1's blue and headed up against, so no trade in there either. All right, those were the trades on the YM. Not the YM, sorry, on the Russell, on the RLM. The YM, let's look at the 4-tick range first, and then we'll show you some other things. Okay, you can see all the circles in here are trades that I missed. This was the trade that I took right in here. Okay, I got long right there, and I took some profit right there. But right after the open, there was an up close right here with bullish divergence. This, again, is the ideal trade setup because everything is, well, this is like an A minus because the MA1 was red, but everything else is blue and headed up. All right, you're not going to get those trades where the MA1 doesn't at least turn on you a little bit very often. You know, there's one right over here. That would be like an A trade right here, where the MA1 never turned blue, where it pulled back. You had your divergence. Everything was red down here. It's all red up here. Those trades right there are very high probability trades. Okay, that's what we're looking for. We're looking for the highest probability trades. In this particular one, you would have entered right there. In this one, you would have entered right there. In this one, you would have entered right there. In this one, you would have entered right there. I mean, you see that move right there, guys? It was from 12,667 down to 12,644. It took 1509.45 to 15. Yeah, this was a pretty quick move. I'm sorry, it was 9:45 to 9:47. So it took 2 minutes for it to get from here to here. Okay, 2 minutes. It was a pretty fast move. In dollar value, what's that? 667. Let's just call it down to 647. Okay, 20 points. That's $100 a contract right there. That's the target, actually. Now with 7 points risk or 7 ticks risk and 20-point target, that would have been the target right there. If you trailed your stop behind the MA1, you would have been trailing it the whole way down. It turned around and gave us a similar opportunity right here on the way back, right up. Okay, so the entry on this one would have been right there. You have your bullish divergence, the up close, and it moved up. All right. All right, let's see. In here there was nothing. Over here was the trade that we took. I don't see my weekly trading zones on here, but I'm pretty sure there's a zone right here at 700. That's why we weren't looking at anything right in there. Right here, coming out of the weekly trading zone, there's a little move down. This would have been like a B minus, C plus trade, because this was blue and headed up. This was the MA1's blue and headed up. All right. There was another opportunity right in here. The cycle's red and headed down. The only thing blue was the MA1. Okay, so that would have given us an opportunity right in there. You could have stayed in the thing through this. There's a second opportunity to get into it over here. The MA1 turned blue again right there. But what I want you to take away from this is the opportunities, the number of opportunities, okay? Right here, big move on the way down, and this was one of the ones that would be an A-type trade, okay? Everything was red, and it just dropped. Right here, yeah, is that the same one? No, it's not. This is 676 down to 655. Let's just say it's down to 656. There's another 20 points right there. That other one, where was it? It was back here. All right, almost identical. This was 945 to 947, and over here it was 1102 to 1105 and a half. So this took 3.5 minutes. Move was pretty much straight down. The entry would have been right there. Okay, that's your entry. Over here, this wasn't the same quality of trade because this was blue and this was blue. But the trend is so strong that your risk would have just had to been up above here for another $100 a contract probably. All right, 20 points. Over here, everything was flattening out in here. The BBC was flattening out. The cycle was flattening out. Though it was blue, everything was blue. Well, actually on the upturn, this was red and this was red. But this would have been like a B-type trade. You ended up staying in it for a while before it moved up. Now you can see there was the opportunity to enter it here and just stay in it up to here. That would have taken about 10 minutes. There was a secondary opportunity. If you got out of this at break even after waiting forever, for 5 minutes. Forever is relative, I think. But if you got out of it at break even before you got over here, you had the up. The bullish divergence right here with the up close, and there it went again. All right, and again, and that's it. Over here, you see we have the bearish divergence, but we went way up through the BBC, so it's mixed up right here. And somewhere right in here we have a weekly trading zone. Right here we have a weekly trading zone. Okay, so this move right here, you might have anticipated moving up to the zone. Alright, that was the YM 4-tick range. Now we looked at things over here on the 1500 a little bit. If you had a 20-point bracket on the 1500 contract, your first pullback would have been right here. You would have come within a couple of ticks of stopping out right there, but you would have made 20 points right there. Your second pullback would have been right here. You would have drawn down about 16 ticks, but you would have made your 20 right there. Your third opportunity would have been right over here, and you would have stopped out and lost 20 ticks. So the net on this would have been plus 20 ticks if you had a 20-point bracket or a 20-tick bracket. All right, so I've done the Russell, the ES, and the YM. What I haven't done is gold, and we were break even on the gold. The NQ, let's look at the NQ quickly. Back it out some. Here we go. These were the setups on the NQ this morning. Okay, I did take one setup over here, which lost. This was not an optimal setup when I took it. You see the blue was headed up against me and the blue was headed up against me. And that's there was a win here, 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 a win there. it was bound to have a losing trade, and of course, when I took the trade, is when it had a losing trade, just a trade that didn't work, and that's going to happen. I'll draw the arrow in here where the entries are. Okay, what you're looking for, bullish divergence, and in this case right here, everything was blue the whole time. You had your bullish divergence, everything was blue. You got your up close, bang, right there. All right, you had a couple of opportunities to enter into that. Over here, on the way down, everything was red when it closed down right there. Everything was red, and you had bearish divergence. So right in there, that's the ideal trade setup. This one right here, and this one right here. It's the same exact thing as it was on the other market. Okay, on all the other markets that we just looked at. Right here, you see the blue is turning up, and the blue is turning up. So it's not ideal. It didn't give as much in terms of profit. It did give some profit, but it didn't give as much. Now let's just move over here. Right here, it didn't exactly hit the BBC. If it would have, then right there would have been an ideal setup. Everything was red. We had divergence, bearish divergence right here. Okay, this is the bearish divergence right there. Okay, you see the greens pulling away from the red. Shorting right into there would have been the spot. Okay, red over here, it wasn't an optimal setup because the blue's going up and up, but it did hit the BBC there, and it gave us a down close for a little bit of a move. All right, over here, when it gave the up close, the MA1 was still blue, but the cycle had turned red. So that wasn't optimal, but it was very close. Okay, same with this one over here. I mean, they both gave, very nice moves, both of them. All right, now if we move over here, I had missed one right in here, right there. The spot you're looking to short here, guys, is on the down close right here. You see we have this right there and the down close after the test of the BBC. Okay, it got really choppy in here. Would you have entered any of these choppy trades? It didn't pull all the way back to the BBC there. Right in here, you did have the divergence. You might have gone long right here. That was red and that was red. It wasn't the optimal trade. If you had gone long, depending what your risk was, you may have stopped out on this one right here. Okay. Let me put a little something on it. Right there, you may have stopped out on that. The reason you wouldn't do it in here on these two is because the MA1 moved down below the BBC when it got into that chop right there. All right. This trade right here I actually took, not an optimal trade because the things were going back against me, and it stopped me out. This one right here I didn't take. The entry would have been right there. I think I tried to take it, but it moved away from me. There was one that I tried to take, another one in here that I tried to take that moved away from me. It might not have been that one. It might have been this one over here. Again, you see on this one the red was coming down a little bit, and it was red here, so not an optimal trade, but still good. This one over here, same thing. This was closer to optimal because at the close of this bar there was just a little blue on the MA1. All right, it didn't go very far, but everything was red and headed down, so there was an opportunity to take some good profit in there. All right, over here was a down close. Again, we had blue and blue, suggesting that it wasn't going to go very far. Over here, where we had the down close, everything was red, and this right here was optimal. Okay, this one right here. On the down close of this bar, right there, everything was red and headed down, and look where that went. Okay, it was followed up by this one, where everything was not red and headed down, but we did have some bearish divergence right there. That one went pretty well too. Over here, this was an optimal trade. Right there. One of the better trades because everything was blue at the time, suggesting it was going to have a big move up, and you can see what it's done. Okay, that was the NQ this morning. So for those of you guys who like to trade the NQ, there you have it. I want to show you guys something else. I will in just a minute here. What are the markets? You know what? I'm just going to show you something else. It's starting to get a little late here. Let me show you on a daily chart right here. I'll blow this up a little bit. This was identified by one of our partners using the slingshot. the slingshot and the green into the brown thing, or just the divergences. On a daily chart, for those of you who may be interested in swing trades or longer term trades, let me just show you. We'll start right here. Okay, there was divergence right here. The green was diverging from the cycle, and the brown, if you look at this, the brown is heading up. When the green turned in the direction of the brown right here, that would have been a time to... Now you could do this with options. You could do this with you could do this with ETFs. You could do this with options. You can do this with a lot of different things. But that would have been the time to consider putting on some kind of a long trade. All right. For swing trades, the market right there at 1281, and well, you can see it went. This was this was in January, and I'm sure we had weekly trading zones all over the place in January that we would have used. Yeah, the DMT also confirms that one. Thanks, Dwayne. We had a cross into the blue envelope right here on the DMT, suggesting we were going to have a big move up there as well. But right there, it moved up, many points, many points. But that would have been a position to look for an entry for some kind of a long. It was the close of that bar, so 1282, and you can see it went all the way up there. But if you look at everything that happened down here, you would have been able to take some profit there. Then it pulled back again, and right here now you're just looking for an up close, which would have been this bar, okay? Because you're not looking for the green to snap into the brown anymore because the brown's changed directions. So you would have been looking for an up close, which would have been this bar right here, and you can see that one kept going. Same thing over here, the up close right there. Over here again, the up close. That one didn't give as much before it pulled back. And now the divergence is starting to switch directions here. Okay, it's starting to change around a little bit. You see the cycle is in the middle now. It's not overbought or oversold. So now you start looking for these little snapbacks on the green line right here. The green going in the same direction as the brown. Right here it would have gotten you short up here at 1392, right in that area. Okay. And over here it's changed directions again. So now up here we just have divergence. Okay, we just have divergence. So in here you would have been looking for a down close with the divergence. The down close in there at 1378, that dropped down to 1354. In here we have more divergence. The down close would have been right here at 1393. Granted, it went up from 1393 to 1412 before it dropped down to where it is now. Okay, yeah. Well, where it is exactly right now, I'm not sure. But it did drop down to 1330. Okay, I just wanted to point that out to everyone that's interested in the larger trades. In the live trading room. In the live trading room in the morning, we have 2 hours to show you trades, to have trades that actually execute. So we use these smaller time frames that show you that the stuff actually works, and we do get a whole bunch of trades that execute on a whole bunch of different markets using the same setups. Okay, but what I just wanted to show you here was that it's scalable, and if you like to trade swing trades, well, there you have it. There's one way to do it, and that was just the ES. We could, you can look at that on the YM, you can look at that on the Russell, you can look at that on, you can look at that on the NQ, you can look at that on the 6E, you can look at that wherever you want to look at it, and see the same type of thing. Okay? All right. Now, if you have not taken a free trial with us, go to www.cfrn.net/apply. Okay? If you have taken a free trial with us and you want to become a partner, send me an email, support@cfrn.net, and I'll tell you what you need to do. If you are currently on your free trial, you should have an email from me in your mailbox. If you do not have that email in your mailbox right now, you can call me, or you can send an email to support@cfrn.net and just tell me that you don't have the email, and I'll send it out to you. Okay, with a current offer that we have. Also, if you are a partner or if you are on the trial and you want that slingshot video, send me an email about that, and I'll send you a link to it. Okay, I'll send you a private link. All right, that's it, guys. I'm going to stop the recording here.